Well, today you're here with your friends, but it's not Don and Gino. It's Don, Steve, and Lou.
There you go. There you go.
Some might argue it's the Three Stooges.
Not Don, Steve. Here we are. Of course, that's Steve Korn with Newhall Escrow Company, in case you're wondering.
And Lou Esbin, the debt doctor, here with us today.
Well, office is Lou Esbin.
Yes, and actually a nice office.
Thanks.
I liked it. I had a good chance to visit Lou this week and have a little seat in his office. And
Yeah, good taste.
And you're listening to Gino Franchi with Cherry Creek Mortgage,
Right.
the host of our
is that
show.
who I am and what I do?
That's what you do.
Well, thank you, sir.
Lender extraordinaire. Absolutely. For sure.
And I want to clarify that we're also a part of the Real Estate Radio Network, and last week Don and I had the opportunity to head down to the corporate offices in San Diego and reunite with about 8 or 9 other hosts that are on air. And it's always great to get perspective from what's happening in the rest of the country. And I think that the general consensus is that things are pretty similar. So I think when we had the last one, we have one of these quarterly, when we had the last one, California seemed to be leading the charge, and Dallas was running a little behind as far as the real estate market goes,
Right.
not the general economy. Dallas was running a little bit behind, and some of the other states were running a little bit behind. And I think that this time we all had to take, we had to make a significant commitment to get away from our practices to go to this particular event because we were all very, very busy.
Nice.
Yeah. So
Well, I mean, you're describing a typical trend economically, where the West Coast to East Coast, moves from right to left. So, I think what you're explaining is, from what we see as trends here, will start to pick up as you move east, and then by the time the wave hits the East Coast, we're starting new stuff on this end. It's kind of this big cycle.
Right.
Yeah, I actually enjoyed that visit because we also were able to learn how to help you more, learn how to make sure that we have great guests like we do today with Lou Esbin and Steve Korn here with me today, to make sure that you get the right information. And we know the cost of bad advice is astronomical. So sometimes, you think you're saving a buck by going to, and I'm just going to say it, man, this is tax time. Do not go to H&R Block. And I'm going to tell you why. This is a specific case that I'm dealing with right now. I have a borrower who came into our office, applied for a mortgage, got pre-approved for a mortgage, and supplied their tax returns that were prepared by H&R Block. Now, mind you, these are their 2011 tax returns. And lo and behold, when we went to verify those tax returns to make sure they were legitimate, they were never filed.
Oh, my.
So she calls H&R Block and says, oh, yeah, we absolutely filed them. No problem. Of course we did. And I said, well, my information is coming from the IRS. And sure enough, she called the IRS yesterday, and lo and behold, no filing.
Oh, my. Whoops.
So talk about the implications of having your taxes now. She's got to go back and file them now, causes the delay in the loan process. Thankfully, it's a long escrow, not a problem. But the reality is that's the kind of cost you deal with when you go to an institution like that that is serving so many people, and they're not professionals. You're dealing with people that are working on a seasonal basis. They have no relationships or ties or accountability to your family. And I know that with our businesses and our models that are here local and accountable to you on not only the radio show, but in the community, we're accountable. And I think that's absolutely critical.
Yeah, I hear that from people who, they call me and they say, oh, I filed a bankruptcy through so-and-so, and I can't get a hold of them, and I've got all these issues, and can you help me? And, they want me to help them to correct a problem that arises from something someone else did, and that just is more problematic.
I get phone calls on a regular basis from people that want to just simply transfer ownership from one party to the other and skip the formalities. And I say, it doesn't matter that you're doing this by yourself or your sales price is, X versus Y. There's no shortcutting the process. It is what it is.
Right.
It's designed for a reason. And so I'm actually a little surprised that mentality is still out there, that there's always a way to cut the corner and still achieve the same goal.
Well, while we're knocking, big corporate names, it's the Walmart mentality.
Yeah.
I can buy this for $2 at Walmart, and over here it's $12, but that $2 item at Walmart they're going to have to buy 6 times because it's going to keep breaking. Where if they spent some serious money up front, maybe not some serious money, but a little bit more money up front, they would have gotten a better product, better service.
It's also confirming what we talked about before, that the consumer is being more thrifty and wise in their spending. So by the time the person calls me and asks how little they can spend or what corners they can cut to transfer ownership. By the time I'm done explaining to them the process, they're not so focused on the saving of money, but obtaining the right level of service. So they're open to the right information.
Right.
They're just out there thinking in the right way. How can I get this done in the least amount of time and expense? But,
Sure.
but it doesn't mean that they're really wanting to cut the corner. They just think instinctively they should.
Right. That's
To
right.
save money. You know what I
That's
mean?
right.
But the point is they're thinking the way they should be, but they're reaching out to the right people to get educated on how it should be done, and then they get things get handled correctly. So.
And that makes a good point, because the other day I was at the luncheon, the VA luncheon, and George Zimmer was speaking.
I was there.
And he was excellent.
Yeah, I
he was
agree.
excellent. And there were people that asked him about, well, why doesn't he buy suits that are manufactured in America, whether or not people would pay for them. And I don't think it was, he made it pretty clear, it wasn't an issue of the cost of the suit, but it was an issue of the quality of the suit and the ability in this country to manufacture a quality suit that would be purchased by the consumer. And so I think what I heard from people was that I think they're willing to spend. They're starting to think more in terms of quality in the goods that they're buying and quality in the services they're buying, and they're understanding that the quality in goods and services may be a little bit more money, but they won't have to spend the same dime several times to get the same product or service.
In our business, one thing I have found is that people are tired of getting bad advice, and they realize that in the past where they've cut corners and got the do-yourself shop or the paralegal office or whatever it is to get advice on doing things.
Or my industry, the bill.
Right. Well, yeah. So the bottom line is they're done with that. They realize they got them to where they are today, and they don't want to go back there. So they're frugal, but they're willing to reach out to the right people, and in a sense of consumerism, pay a fair fee for the right service. But they're reaching out to the right folks now versus that old mill action or the do-it-yourselfers.
Right.
Yeah. So if you just joined in, you're listening to the Don and Gino Real Estate and Finance Show. And today joining me is Steve Korn and Lou Esbin. Steve Korn with Newhall Lester and Lou Esbin with Esbin Law. And we're discussing value, the value of goods. It's not the cost of goods, but it's the value that I think that we're discussing, because the quality does have a big piece in it. So I think this tags on to your need,
want, need, and afford.
Yeah, that thing.
You got a moniker for that, so it's easier to say. Like eat, something you can just go off the top of your head.
Well, you can tell I never make it past want.
For sure.
But like, want, need, afford, and when you're taking into consideration that purchase, what am I buying and what's the value of the good that I'm buying?
That's correct.
So I think that that's something that's imperative going forward, because we did go, for a little while, I think we threw value out the window, and we went to a cost-based economy, and I think what we've done with that is we made China a monster by saying quality is not important. And now, as the years have gone by, China has adapted to what our current needs are, and they've increased the quality. After making everything inexpensive, they now increase the quality of their goods. They still have some problems, but nowhere near what it was years ago.
Well, I think when it comes to the word afford, I think people are thinking not only the traditional, have I set aside my savings or retirement, taking care of everything else, but can I afford to not have the highest quality of goods and services that I can afford? And what will be my mistake if I accept lesser in quality and value? So I think that's part of the definition of afford today.
I think that's great, because you're saying that people are actually stopping and thinking instead of just taking action on that spontaneous moment, like you said the mall's built on.
Right.
It's no longer spontaneity. People are actually taking a breath, stopping, and taking that moment to think about whether it's something that they like, want, need, and afford,
Right.
and whether it's something that is of value
Correct.
and will have some sort of lasting duration in their family.
Shifting gears on the topic of discussion with respect to consumer, getting a little smarter, being more conservative, looking at their spending. Are you seeing, what are you seeing trend-wise in bankruptcy filings?
The bankruptcy filings are down
Okay.
from historical highs. They are probably back to where they were in a normalcy
Okay.
manner. So they're actually down about 35%
That's a
overall.
significant number.
Yeah, but 35% from a
Right.
huge number.
Right.
Okay,
Right.
so statistics are a funny thing.
Yeah.
They're more complicated. They're more complex. the issues that are coming up now in bankruptcy filings are taxes. They are the residual effect of the economy with more complicated issues where somebody like myself, who is a certified specialist in bankruptcy, really needs to grapple with many pieces of a complex puzzle. And going back to value and affordability, I shudder to think about these people going price shopping and thinking that they could spend less and get the same issues resolved.
So when we come back from this break, we'll kind of just circle back on that bankruptcy filing situation,
Sure.
and let's make sure we touch base on the trend of new businesses starting, and just kind of summarize that and wrap it up, and then
Sounds good.
Yeah, and most importantly, we have Joe Messina on our chat roll saying, well, how come credit card debt is rising? So when we come back, we'll talk about that a little bit more on the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220, KHTS. of us.